Thank you so much for joining today. I would like to give you a quick overview about common ESG investment approaches. ESG, as you know, environmental, social, and governance aspects, is actually to consider factors that either do something good for the environment or do something to improve the social environment or governance board decision making. When it comes to portfolio management and investing, there are usually six approaches to consider ESG. The first one is negative screening. What does it mean? It's basically that you exclude companies or certain sectors based on business activities or environmental or social concerns. For example, I believe the Norwegian government pension fund Global, it's one of the world's largest sovereign wealth funds, excludes companies involved in tobacco production and those companies with severe environmental damage records from its portfolio. So this is negative screening, which means you exclude certain assets. Positive screening is the opposite. It means you include sectors or companies based on specific ESG criteria, typically ESG performance relative to a peer group. And for example, the Domini Impact Equity Fund selects companies demonstrating very strong ESG performance relative to the peer group, such as those with a very robust environmental policy or good labor practices. So positive, you include good companies from an ESG perspective. Then number 3, ESG integration. And here we are not looking at negative or positive screening. It just means during the portfolio management or the investment approach, we would consider ESG risks and opportunities as part of the overall process. Yeah, so here it's really to think about, okay, what are the ESG risks and opportunities? Number 4 is thematic investing, which means, for example, that certain funds or investors focus on companies in renewable energy, wind, solar, or other clean energy segments, or anything from a thematic perspective that has a positive ESG footprint. Number 5, engagement, active ownership. This is all about using shareholder influence to change corporate behavior, to ensure those companies do something regarding ESG objectives, for sure, along with financial returns. And here it's all about using shareholder voting rights to influence corporate behavior. Issues like climate change, board diversity, how can we make companies better from an ESG perspective? And then impact investing, this is the last key part, is where you basically make the investment with the intention to generate positive social and environmental impact. Here, for example, DBL Partner, a venture capital firm, they invest in companies aiming to generate social and environmental benefits, which focuses on sustainable transportation, energy solutions, and so on. So here really about, okay, where can we put our money to do something good? These are the key investment approaches. However, as ESG is evolving, there will be additional practices and approaches coming out. So this topic is always changing, but these are the current 6 key themes when it comes to ESG investment approaches. I hope you found this useful. Thanks so much for listening, and I see you in another video. Bye bye.